Boom.
Boom. And just like that, we are back. Man, it feels good, Josh, doesn't
I
it?
know. Isn't this nice?
Like we
Man,
never went away. Hey, for those of you that don't know, my name is Judah Hoover, and I am a realtor and a property manager with Home 365 now. We
that's
changed our
right.
name this summer from Slate House Group. This guy right over here is Josh Weidman. He is
What's
a
up, guys?
hard money lender. We're both real estate investors. You can check out Josh's contact information is right above his name. Mine is not, because instead of reaching out and calling me, what I want you to do, the call to action for this show is to check out the Landlords and Investors Mastermind Group. That's what LIMG stands for.
That's right.
We will be at the Red Lion Hotel tomorrow night, Thursday night. The doors open at around 6:30, and networking starts then. Presentation starts at 7, and it goes till 9, and then we have lots of time for networking afterwards. Troy
So,
Good, who is a
yeah.
contractor and also a real estate investor, is going to be speaking with us and just talking about his real estate journey. It's about something stupid like 19 houses or 19 units in the past like 2 years. Really cool guy, and is going to have some really great information for us.
Judah, I always love coming to your meetings, and I'm a huge advocate and proponent. Unfortunately, tomorrow night is the home opener for Penn State wrestling, and so I'm not going to be there. I'm going to be in State College cheering on the Nittany Lions. However, I'll be there in spirit. But I'm really kind of excited for your guest here. I'd like to hear a little bit about him, because I know we were talking a little bit about this earlier. You were telling me he's been through the ups and downs in a market cycle. Like, I mean, you and I have been both went through the 2008 debacle and all that kind of stuff, but a lot of people haven't seen that. And it's really interesting that you're bringing him in as a speaker on that topic. So go ahead. I'm going to shut
Right.
up.
Well, I think that what's so great is Troy started investing about when I did, early 2000s,
Yep.
built up a rental portfolio, basically sold them all in 2006 and 2007.
Smart guy.
Was able to exit the market and saw that coming, but he does not think that we are in a similar situation right now where we are going to see a catastrophic collapse of real
Yeah.
estate. That's going to be one of the things that we talk about, why he's still bullish on real estate and why he's still looking to buy. And that's actually one of the things that we're going to talk about in today's show as well. So you want to be
That's
there.
right.
You want to check it out. There's just you can only get so much from podcasts and YouTube videos and bigger pockets and things like that. There's just an element of this business that you get from being belly to belly, face to face with people, and doing old school networking and actually talking with people. So
Yep.
I really encourage everybody. It's usually the fourth Thursday of the month. This month is obviously the third Thursday of the month because next week is Thanksgiving, obviously. So.
Well, Judah, I mean, listen, I would have probably foregone a Thanksgiving dinner to come to the meeting this month, but I can't pass up on the Nittany Lions, right?
Right. So what you're saying is, in Josh's hierarchy, it's Thanksgiving, LIMG, wrestling with the Nittany Lions.
There you go, man. You nailed it. That's exactly right.
Right.
All right.
I went back to a little high school logic problem there based on the information you gave me. I was able to figure out how you rank things.
Well, so Judah, since we last did a broadcast here, there's been a lot of stuff going on in the real estate market. Obviously, it's been super hot. We've had a lot of interest in real estate. Geez, we've had the hottest real estate market in the history of the world for the last year and a half since COVID opened up, and now it looks like there's some changes or maybe not on the horizon. So let's jump in here. I mean, I wanted to start by talking about Evergrande. This is kind of a long ball story, and I think on some of our previous shows, I've been kind of a naysayer, right? I mean, and I've always said that I thought that there was, that Black Swan event. I think there was a Black Swan event that was going to come and it was going to change the market and things were going to get ugly. And I thought it was COVID. I thought it was this. I thought it was that. And you were just sitting back and you're like, yeah, it's not so much. It's not, And then Evergrande comes along. And here's a company that, You want to tell the story? You want me to, Judah?
No, I think it's I before we tell that story, I just think that this is I think it's important to talk about black swans and what they are. They're an unseen thing that can come out of nowhere.
Yep.
Remember, everybody knows the name Wuhan now, right? Everybody knows the name Wuhan. Wuhan is the eighth largest city in China. It's the eighth largest city in China, and it's bigger than New York. And no one in America, I mean, other than, a couple people, knew where Wuhan was or had ever heard of it. So the point is, when it comes to black swan events, there's so much out there in the world that we don't know and therefore can't forecast and can't predict. You can read the news every day and be hyper plugged in and everything like that and still miss and not know that a pandemic is coming. Now, the pandemic actually did the opposite. It helped real estate values for a whole number of reasons and things like that. But this thing with Evergrande is another thing.
Yeah.
It just
Yeah.
coincidentally happens to be a China thing, but they're a huge real estate developer. And remember, when you measure GDP for a country, GDP, gross domestic product, it is everything that happens in the private sector and everything that happens in the public sector. So when the army buys a tank, or you buy a Ford Escort, is Ford still
Hmm.
making Escorts? It's
I don't know.
both of those prices combined with everything else to create the GDP. So what China has done for a long time is they build a bunch of buildings whether they need them or not.
Well,
And the
dude, it's
government,
even worse than that. It's more insidious than that. That's the craziness. But keep going.
well, I was
Yeah.
just gonna say, so the government, what happens in China is, and I'd love your fresh take on this too. So the government, so that people can build, and
Hmm.
so that you've heard about ghost cities and other stuff like that that happen in China. What happens is they're interested in keeping their GDP as high as possible. So
Yeah.
the government lends money to companies. They underwrite banks that are going to lend money. They kind of guarantee the bank. They say, hey, bank ABC, you lend to this builder, and if they default on the loan, we'll make good on it. They do a
Sure.
number of things to pump up building, and one of the biggest builders was Evergrade.
The
And
biggest builder.
unfortunately,
They're the
okay, big,
biggest builder in China. I mean,
cool. So,
craziness.
and so what happened is China was like, we're probably kind of getting to the point where we're tipping the scales here a little bit too much, where the debt you're carrying is no longer something that we think is safe, because if you fail, you could bring the whole country
It's
down. Well, guess
Judah.
what that meant? Like
It's a
talking once you talk about something, you kind of create it.
Well, so watch this. Back up a little bit because
Yeah.
it's worse than this, right? It's not a self-fulfilling prophecy because Evergrande got into a situation. They were so successful for so long because they would outbid everyone on land prices. They would overpay on land. And then in China, the economy is set up in such a way so that when you put down a deposit on a house, it's a minimum of 50%. Oftentimes it's 100% of the value of the property of what you're buying it for. So essentially, you're buying the property pre-construction with 100% or 0 to 50% financing. So now, what Evergrande has done is they were building so much, they built a Ponzi scheme where the next project, they were building projects with no profit and they were taking profit out and then they were pushing it to the investors and it got so big that now they have something like $300 billion in debt and they have these bond payments that they're coming up and they continually are missing the bond payments and the payments get larger and larger. And what has happened recently is that they've been swooping in. And so this is kind of a funny juxtaposition. If you look at the US response versus the Chinese response to, this kind of shenanigans, financial shenanigans, right?
Yep.
In the US, what do? We bailed out all the banks.
Correct.
In China, the I don't know, the head of the Communist Party, he goes to the head of Evergrande and he says, well, looks like you better start selling some stuff because you need to make these bond payments. So it's reported that the head of Evergrande has liquidated about $1.2 billion of his own assets to start making these bond payments and making payroll and doing all these things and keeping things current. The problem is he's only worth about $8 billion. and the bondholder debt is significantly more than that. And so that all this stuff taken into account, you get a company this big, there's guaranteed that that this touches Wall Street, this touches the banking system in the US, and it's got a ripple effect across the world.
So you tell me, Josh.
Yep.
Certainly was interested. My curiosity was piqued when this story broke about 2 months ago,
Yeah.
uh, and I was worried that it could be a black swan event.
Yep.
Since nothing has happened yet, do you
Yep.
think that this is still a potential black swan event, or is this just instructive to talk about that black swans can come out of anywhere, whether we're prepared for them or not? And I think that this is more sizzle than steak, but I still think it's instructive to talk about. Do you think that the fuse is still burning on this, and the bomb could still go off?
Well, so here's what I think. I think that anytime you have a continuous upward market, right? That's super attractive to normal people. It's even
Right,
more attractive to criminals. And so what you end up with is the longer you have an upward cycle, the more opportunities people have to get in and get out and never be discovered in
right,
kind of
right,
criminal capers until the point
right.
where it just gets so
You
big.
would know better than me. I don't associate with many criminals, so
No, well, okay. So one of the indicators that you're in a bubble is an uptick in fraud, like that. They correlate to each other, right? And so that's one of the things that I think that the longer we have a continually increasing market, the more people are attracted to large dollars and fast money. And the type of people that are attracted to that kind of environment oftentimes don't have the best of intents and might be a little criminal, right?
yeah.
So I guess what I'm trying to say is Evergrande, it might be the black swan. I mean, the collapse of the subprime market, that was about a year and a half before we
It
saw a
did.
real collapse in the
It took a
U.S.
long time.
housing market, right?
It was during the tail end of the '08 presidential election, if
Right?
you remember,
Yep.
and because famously, what's his name, John McCain, like stopped his
Suspends his,
campaign,
yep,
suspend his campaign, and there was talk about the economy could crater, and keep this thing from cratering. There was obviously
yep.
some gaps there and everything like that. And but it wasn't until 2000, and that was like the end of 2008. We saw the beginning of 2008 some rumblings. It wasn't until 2009 and 2010 that we
Hmm.
really saw the market collapse. So yeah, I agree with you. It could be, but this is one company
Well,
overseas in China. Could it?
so let's put this in perspective, though. The entire bank bailout was what, $300 billion.
Something like that.
This one company has $300 billion in debt.
I
In
see what you're saying.
addition to that, you've got all of these other builders that are
There's other builders
now,
similar to them.
it's a
They're
ripple
like the
effect.
little kid brothers out
Yes.
there.
Yeah.
I see what you're saying. Well,
So
so
it's something to keep an eye on. That's it. And the nice thing is, it's not like Evergrande came out and they're like, you know what, we're done. We're walking away. All you bondholders, all you foreign investors, sorry, you're holding the bag. They're working it out, which at least gives you time. So you say,
right,
okay, if I've got a rehab project that I'm in the middle of, let's make sure it gets done and in a timely fashion, and let's sell it because the market's great right now, right? Like,
right.
now's the time. All right. So that brings us to another. Hold on here. Let me bring up this other slide here. Bum. Okay. So this brings us to another story, and that's Zillow.
Yeah.
And we talked about Zillow and the iBuyer programs and stuff like that. We talked about that numerous times on the show, and it's fascinating that
We were both skeptical that
yeah,
Zillow would ever be able to make a profit flipping houses at scale.
it's hard. It's hard to do. It's hard to do if that's what you do for a living, especially when they're in your backyard. It's tough, but it's even harder across the country. And so that's kind of an interesting discussion. Why did they back out of this? I mean, obviously they're not making money, so that's a big part of it. But is there also some projecting out? Hey, look, this is tougher than we think, and the numbers aren't kind of playing out as we think.
Well, I think that if you lose money as you're doing something and you're a publicly traded company, eventually your stockholders are going to say, "Hey, why don't you do that? Not do that thing anymore?" You
Right,
know,
right.
if Zillow got into the diaper business because they thought they could make money at it, and turns out they couldn't, their shareholders would say, "Hey, you know what? You're not a diaper manufacturer. Why don't you stick to what you're good at?" That's an easy thing to understand. What's complicated is a lot of people don't realize how different data real estate data is from real estate
Execution.
rehab and sales and execution.
Yep.
So they are Zillow is a great data company. I like Zillow. I'm more bullish on Zillow data than a lot of my other agents are comfortable with me talking about. Because I have a lot of my own data too, and I see how closely they line up, and I also understand how hard data is. It's easy to pick, you know, the times that that things are wrong and harp on that. But if you take a bigger perspective, Zillow is good on data. Here's so their shareholders, I believe, is where this big push came from to get them out of this business. And the bottom line is, when you figure, they said that they were buying all these properties with cash. Doesn't matter whether you're buying with cash or not. You still have opportunity costs. Having the money tied up in the asset still costs money.
Yeah.
And Zillow, when you add up all of the costs that they had, they were making like $2,300 on some of their, was like kind of like
Judah.
their average flip.
Judah. They lost $54 million and in the second quarter of this year.
Yeah,
And during that time, the revenue from the iBuyer program was responsible for 50% of the income of the company. I mean,
right,
and like you're talking about 50% of the income and they're making no profit or they're losing
right,
money in it.
right.
That's bad news,
Yeah, well,
right?
Josh, you wouldn't I mean, if I came to you with a hard money deal and I was like, "Hey, Josh, I wanna flip this $150,000 home,
Yeah.
this, median income home in my market, and I think that, I'm gonna net $2,500."
Dude, listen, here
You
beyond this,
wouldn't sign off on that deal, would you?
not just that, maybe they should be working with lenders. Maybe they should reach out to hard money lenders to underwrite their deals before they put them up there. In fact, hey, maybe that's the answer. You get
Right,
them in the network and like if this guy would fund the deal, we'll buy it.
yeah, Josh, you know what? That's a business strategy for you moving forward. Go to Zillow.com and,
That's right.
find the contact us
Perfect.
button and click on that and just float that idea by Zillow and see
Well, dude,
just come to me for your hard money, Zillow. And if I
that's
do
right.
the deal, it's bound to make sense.
That's exactly right. Well, dude, beyond that though, this is what's I think is so funny about this Zillow thing. You just proved my point for me. When they bought Trulia, I used to
Mhm.
use Trulia to look at their market data because they had such good information they took the government data and then they turned it into a functional form that was easy to search and easy to analyze and all that kind of stuff. Well, they've got a ton of market data. Zillow and Trulia together, have a ton of market data. And I'm wondering if they don't see something that's coming. And I know that sounds silly, but like it goes into the conversation. If this was the only conversation that Zillow pull out, right? It, it's a kind of a funny story about don't be an idiot and try to flip houses when you don't know the market, right? And
Right.
it's not in your backyard. Great, but in the context of the larger discussion on this continued upward market trend, I think this is something to talk about. I think it could be Zillow looking at their numbers and saying, okay, well, we lost a little bit of money, and it's not a huge deal. If we continue on this trajectory, we're going to start being profitable. It's going to be good. I don't see that loss as a huge negative sign in and of itself. You know what I'm saying? And
Yeah.
maybe, yeah,
So you think that this is Zillow with an indication of what's to come? I don't know. I think it's and again, this is just the classic Josh and Judah difference. I understand where you're coming from on that. I think that it is just an indication that flipping houses is hard to do. And I also think that it is an indication that ultimately, if you're doing a deal, you need to be the decision maker. I
yeah,
can't tell you how many times people call me. Listen, I've been doing this for 20 years. And people call me all the time and they're like, "Hey, Jude, did you have access to good deals?" I was like, "Yeah, I have some access to good deals." "Jude, did you have access to like good contractors?" I could line you up with a contractor. And hard money sources and private money and stuff like that. Yeah, I could do that. Judah, find me a deal, find me a contractor, find me some money, and let's
That's
do a
right.
deal together. I'm like,
It's
wait, if
perfect.
I want to put the time and effort and energy and do all that together, what do I need you for? And Zillow was a bunch of executives saying to junior executives and recent MBAs and Wharton School graduates, "Hey, just follow this model and do this, and everything should be okay." But you and I both know, Josh, like there's a difference when it's like your skin in the game, when
Yeah.
it's like you're on the line. I was a lender for 10 years before I became a hard money lender,
Hmm.
and I didn't even realize how much I was not paying attention to that man behind the curtain when I was lending somebody else's money. When
Yep.
you're lending your money, when it's your cojones on the line, you obviously treat that deal a whole lot different. And there was just nobody really, no one had the enough of a fear of loss at Zillow to mind the ship and make just all those little different strategic decisions that come into play when you're rehabbing a house, when you're flipping a house. Do I buy this house? Do I buy that house?
Yep.
Do I pay 50 or do I go up to 52? Sometimes you're saying, you know what, 52 is too much. And there was no one at Zillow who was ever saying, 52 is too much. I know now we didn't see a whole lot of iBuyers here in this area, but a good friend of mine, Greg Swan, who we've had on the show,
Yep.
he competed with Zillow and he spanked them at their own game. And he would do deals just specifically to sell to Zillow, knowing that because they were gonna overprice
Yep.
and because they were gonna overpay real estate. So
And
um
when you have a hard and fast rule on how you buy a property without without actually the human touch of saying, is this really a good deal or not? It changes the game. People learn the rules and they're going to circumvent the rules so they can maximize their profit. That's what happens, right?
Yeah, it is
Uh,
not as easy as Chip and Joanna Gaines make it seem. It is not as
that's right.
easy as the Property Brothers make it seem. It is not as easy as gurus make it seem. You've got to really know this business. Now, listen, I think the biggest problem with real estate is people are too afraid. I think the biggest problem with real estate is people don't move forward. I think the biggest problem with real estate is people are always looking for that elusive first deal, and they never actually take action, and so therefore they never actually, you
So
know,
I
get started.
really agree with that perspective. However, it's funny because I've in seeing some of the things that seeing Facebook isn't real life. That's what
Right.
most people show you, and when you can see behind the curtain and you see what people actually make on deals and you see which deals are actually good deals and, those that are not and who makes money and who doesn't, I think it's smart to analyze a deal.
Yeah.
However, it's not realistic. You also have to be realistic, right? You're not going to make $50,000 in profit likely on a house that is going to retail for $100,000 or $150,000 for that matter.
Right.
You got to target the right numbers. But anyway, that's neither here nor there. So, one other big thing in the market right now is inflation, and I think this is part of the fuel that is feeding the higher prices in real estate. I think it's legitimate because it's an asset, and you've got you've got so much money out there that everybody and their brother seems to want to go and buy another piece of real estate, including large hedge funds and including investors that are looking for their first or second or 50th rehab or rental property, and it's just got a crunch on things.
Yeah, absolutely. If you look at what is going on in center cities, those are going in one of two directions. Either they're gentrifying or they're collapsing and just coming off of the housing rolls.
Hmm.
And so they're creating value two ways: by improving assets in the cities, and then also by shrinking the housing stock. And I should have come prepared. Forgive me, I didn't come to class prepared today, Josh. But I've got a really cool chart that shows how for about 10 years leading into the recession,
Yep.
we were under building the 50-year national average.
For
And
15 years.
since then, we were overbuilding it. And now we are under building it. And
Hmm.
in the same time that we are underbuilding the national average, we have two things going on. Baby boomers, are finally kicking their kids out of their house, and there's a bunch of millennials who are moving out and buying real estate. Turns out millennials do want to own houses. It was a lie just to cover for a bad economy that, oh, maybe millennials are just going to rent for forever. Hogwash. And the other thing that's happening is this very real inflation. So just like gold is been a hedge against inflation because it's a tangible asset,
Yep.
and just like real estate, the land and the improvements on it are a tangible asset, and they are only going to continue to go up in value.
I totally agree with you. And over time, I think that's 100% true. Um, Piggyback on that, the difficulties that we're having getting raw materials. I mean,
Right.
these pipeline issues, they're a real issue, and it's funny because depending on who you talk
Supply
to,
chain, not not
supply
not
chain.
not not pipeline like,
Yeah,
there's
fair
there's
enough.
there's a hard that's another buzzword that we're not gonna get into right now.
That's right. That's right. All right. So the supply chain issues that are going on right now, you've got one side of the equation where people are saying, "Oh, there's just not enough truck drivers. There's not enough people to work at the docks. There's not enough this and that." And then you talk to the truck drivers. I heard or I'm sorry, I read an article where they interviewed a lot of these truck drivers, and they're saying the whole thing is a logistical problem. The issue is that yes, there's an increase in demand at the ports, but the issue is that the people that are conducting the freight and the drivers and everything like that, they've created this bottleneck at the ports. And because of that, it's just slowing down the entire process. And you have truck drivers that are sitting at port just waiting. And I mean, the argument that they were making is that because of the way the compensation structure for shipping is set up, if they have to hire a crew to unload one ship, right? It's billed on hours. It's billed on time and expenses. So you end up with a flat rate of $8,000 for the ship plus unloading charges of 17 grand that are billed after the fact. And so the incentive is keep it long and slow so that we can increase our profits, but it hurts people on both sides, including the truckers, including the people that are working at the port, including, our economy and things like that. But the bottom line is we're not getting the stuff we need in the timely fashion, and it's slowing down building. It's increasing costs. It, I got a
All of
rehab that I'm
those
waiting on
problems
cabinets for 3 months.
Right, all of those problems lead to higher prices for real estate,
That's right.
and more demand out there for existing real estate, and
Yep.
slowdown in construction. Yeah, Toyota, about, I don't know, 15 years ago, kinda came, probably even more than that. Toyota's been the poster child for, and they helped develop just-in-time manufacturing. It was always called the Toyota model, where you don't build something in a warehouse it, you build something and you have supplies come in just as they're needed. So, if you make a part for my widget, I don't buy 10,000 of your parts so that I get a cheaper price, because then I also have to warehouse them. So
Right.
so
And
just in
ship
time
them.
for right, and ship them and all that stuff. So it's just in time fulfillment is how our whole supply chain has been set up, as Toyota very famously first did. Well, the I heard an interview with the former president of Toyota North America,
Hmm.
and he said, "Hey, we basically stretched ourselves too thin here. We set up the global supply chain of the world to be so efficient, so highly tuned that then it broke. Like a Ferrari is a great car, but you don't take it off roading. It's
Right.
it's highly tuned for what it does, and so we were operating a highly tuned supply chain that highly tuned supply chain was working as long as there was no pandemic, as long as there was no inflation, as long as there was no oil crisis, which we have had, a minor first, glut of oil, now not enough oil, so these
Hmm.
fluctuations that typically happen in a supply chain. For about 30 years, we had ironed most of those out, and we made it too perfect that it broke. And the other thing that he said is, Hey, it doesn't matter. You could double the port supply or port capacity in China or
Yep.
in California tomorrow. Double it tomorrow, and guess what? All you've done is move the problem to the railhead.
Right.
You
Right.
know, all you've done then is, so the problem, the challenge that you have is we have a systemic problem with our supply chain, and it's going to take some time to iron out. And I think all of these things combine to only point to more than likely real estate values continuing to appreciate. Are they going to continue to be white hot? I'm not saying that. Is there a potential for a black swan to come out of someplace? Hey, we talked about that at the beginning of the show. How black swans, by definition, come out of nowhere.
Yep.
But so it's important to have some reserves. It's important to not overbuy. It's important to be smart about everything. But I see values going up.
I don't. I'm not sure I agree with you, but it doesn't matter. We'll say, but here's something that just occurred to me as you're talking. I like to pull the thread, right? So why is China having production issues? Well, they're having production issues because they got in a fight with Australia over where COVID came from,
Right.
and because of that, they can't import enough coal from Australia. Why does that matter? Oh, because a flood flooded all of China's coal mines. And so they need to import it. And so they can't even keep the lights on now. And they're not even in winter. And this is going to have a ripple effect across so like I'm pulling this string. We've already seen what is it? Propane and natural gas costs are up like 300% since last year, something like that.
Right.
It's a really ridiculous number, right? Who are the people that are going to be most hurt by this in this country?
Poor and women and children hurt the most.
Well, right. But the core of this is, where do those people live? Are they homeowners or are they tenants?
Tenants. I see
Right.
what you're saying.
And
Yeah.
what else is happening with tenants? Prices
Yeah.
are going up, and prices are going up. But thankfully, the minimum wage is no longer $7 an hour, right?
Correct.
You can't get somebody to walk through the door for less than $15 an hour now, and that's pushing it.
So you're saying that the market solved the minimum wage problem on its own? That's interesting, Josh. So
No,
rather astute of you.
listen, that's a whole other argument. A $15 minimum wage was enforced by a lack of employees as a result of people
Who cares? The government didn't need to raise it. The
being
market
the
took care of
heck
it
they
on
did.
its own. It
No, 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 no,
happened.
no, no, no. This is a government problem. They pushed people into their houses and they got comfortable there, and then they compensated them and found ways for them to get paid without working. That's a problem.
That
Anyway.
is yes. Yes, yes, yes. All right.
Anyway, we'll talk about it later.
I hope
Yeah.
so. Guys, we are going to be back, kind of for ad hoc shows like this when and
Yep.
as topics come up that we want to talk about. Reach out to Josh, reach out to me if
Yep.
there's something specifically that you would like us to cover.
If you've got something that you want to talk about, you think you've got a really unique take on the real estate market, you got a unique take on real estate in general, and maybe the way you're investing, we'd love to talk to you. So reach out. We'd love to maybe have you on the show if you're interested. And if you're interesting, but yeah, man, please stay in touch. We love the comments. Let us know how we're doing.
See everybody, and don't
Well,
forget to check out the Investors Club
that's
tomorrow
right.
night
Well,
at
there we go.
tomorrow
Up
night
there.
at Red Line. Reach out to me or Josh if you need more information about that.
That's right. Check out LIMG Harrisburg meetup tomorrow night. Get there at 6:30 when the doors open. Presentation starts at 7, right?
Yes.
Awesome. Guys, thanks so much. Have a great day. Go make some money. We'll talk to you soon. Take care.
See everybody.